All right, guys, welcome to day 26 of Anomaly sequence. Today we're going to be talking about the 8th day of the TradeFlow trading competition, that midweek, that Wednesday, which was a super interesting day, right? Coming off the backbone of a very adaptive Tuesday. If you haven't seen that video, make sure to check it out. It's the previous one where I go over all of these positions that I kind of navigated myself within. I'm going to be talking about the Wednesday, and pretty much what I'm showing you guys as we go by day is how I adapt on my market sentiments, what I'm actually executing, what I'm looking at, and giving you guys insights of what is relevant that you need to look at when you get similar scenarios, similar things that are occurring, or stuff that isn't necessarily the same. And Wednesday was a very, very interesting one because this brought a lot of head scratches to a couple of guys in my group in AO as well, trying to navigate these intricacies because we don't see that often. And the biggest kind of anomaly that we saw here was the fact that we saw, let's say, this trending Asia session, which is super, super nice. But yeah, overall, kind of what we want to look at in these moments is, when you have something along these lines, right? If we compare that to the Asia session before, so in this case, the one that was on Tuesday, you will notice that this was the average Asia session that we see in this period of time. Super bland, an odd 18 pips, right? And you can just see price consolidates in that Asia session kind of dying down. Likewise with the one that we have on Monday, it wasn't that interesting. We had roughly 25 pips odd, and it price just distributes, right? So that's kind of what you expect from an Asia session. But in this Wednesday, what we actually had was pretty much the high to the low being twice as big, and that confused quite a lot of the guys, pretty much because we automatically then create one of two things. You automatically create this liquidity void on H4 that you can see right here. You can see that this then becomes your H4 imbalance. You go to H1 and you can see that H1 is right there as well. And suddenly you've got this inefficient move to the downside where you don't really necessarily know what to do with. 9 out of 10 times with your standard Asia play, you don't take any arrays from Asia, right? You don't look at the order blocks, you don't look at the imbalances. Why? Because it is a session that doesn't hold a lot of volume. It doesn't hold the significant amount of volume to make it relevant that these arrays that are created in that session will deem to hold throughout the rest of the day, such as an imbalance on order block from Asia session. But knowing that in this, let's say, lackluster session, we have these really big imbalances being created, it is something to take into account. And you will see exactly how I did that day, being quite the intricate day. So yeah, let's go straight into it. And the only thing that I do use day to day from your Asia is obviously you can start using the standard deviations that I mentioned. Obviously you use Asia high, Asia low, which will give you a better narration, a better formulation of what you want to expect that day. But also I like to use your New York midnight open. That is something that I will have plugged in automatically with just whatever indicator you want to use. There are numerous ones that you can just use to automatically draw up, but at the end of the day it's very, very simple. It comes down to just the opening of New York midnight open, right, of that day, and it's from UTC4, UTC5, depending on daylight savings obviously. But it's pretty much where you anticipate your protraction to occur that happens before London, before New York, or at London close, in the opposing direction of your anticipated direction, right? So what we kind of see here as well is if we were looking for buys that day, this is kind of your protraction lower, this is your protraction lower. Again, this is just very simple knowledge that I really expect you guys all to just kind of take notes upon, because I'm giving this all out. It's maybe not structured in a way that you want, But these are just the things that I look at day to day. Also knowing that London, right, and New York, they act as like brothers in the sense of if London does something, 9 out of 10 times New York will be an amplification of London, right? And then after that, you will get the true movement if it's been a rangy day like this. So let's talk about pretty much what I was looking at that day. Standard protocol, right, in my opinion here was, again, we're playing lots of Asia plays because on the higher time frames you could see that we were still kind of waiting for that actual solid push lower to get some sort of bearish momentum to really get that higher time frame bias to kick in. So I've been playing lots of scalps in that sense, just quick in and out plays intraday, even like intra-session, if that's even a word. Making sure that I'm positioned in a way that, one, obviously I'm playing high risk on the competition, but two, also making sure that we are just playing quick plays and adapting very quickly. And Wednesday was the perfect example for that. So you can already kind of guess what we're about to look at for this session. We had Asia low sweep. We were well aware of pretty much these highs being there, the upper one being your H4 and the lower one being your H1, right? In this case, you can ask yourself one of two things. If the higher time frame array, so in this case, imbalance, is smaller than the one that you have on your lower time frame, it is leading, right? So you can remove the H1 imbalance because your refinement is actually already there on the higher time frame. You don't need to have your H1 imbalance if your H4 imbalance is smaller on that liquidity void. It's a lot more accurate. What many people do is that they'll do the opposite, right? You can see here, oh, I've got, and look, in this case it worked out, don't get me wrong. In this case you're like, oh, but I've got this M15 pocket, right, in this leg to the downside, and I can refine that. And here, yes, right, this was used to perfection, trust me. But you don't want to make sure that you're missing out and deleting your H4 if your H4 is already smaller than your H1. I hope that that makes somewhat sense, but we'll get to this pocket in a second. So protraction lower under New York midnight, and we do one of two things. Very, very simple. We run Asia low, we run this low right here, right? And your shift is as clear as day, right? We actually create quite a nice candle here, and this becomes your play. This was my first play, right? Just here, simple, making sure that we're entering just off of the shift. Why? Because we have intent, at least to the downside here, and we've got some sort of play here. I didn't necessarily like this, right? I'm pretty sure that in this area we were waiting for DXY to cross-reference its entry. We can check that out now, pretty much. As you can see here, pretty much it wasn't as clean, but you can see that we're waiting for that execution to occur right here. Not the nicest. It's not as if in this top right here there was an order block, right? And you'll see exactly how I managed to manage this trade. But once DXY was here, it was a cross execution on EU, which made it super easy to look at, in my opinion. So again, you can see that this is where the shift is, and this was the first position that I took on London session of the day, right here. SL under these lows, right, and then I was targeting pretty much that open pocket the whole time. That's all I wanted to play. But obviously you can see this failed miserably, but I managed to actually get out break even around this point. Why? I'm going to show you guys exactly why. What are a couple things that you notice, right? So you go to M15, M5. This is what M5 looks like. It doesn't look any better than M15, to be honest. Your shift doesn't come anywhere. It's not as if you want to play something along these lines, but you will notice one of two things. This move, this bullish injection to the upside right here, starts to really slow down. You can see that we tap that proximal line on that H4 imbalance, and then the big issue, the big red flag that I saw was that we are creating bearish imbalances, bearish arrays, and we are testing them, not inducing them, and then continuing low. So right around here, I close this position and I managed to get out break even. Then we pretty much do one of two things, right? We actually see that price sweeps that low one more time, which is great. And then we rinse and repeat. We do the same thing over and over again. So again, M15, I was on M5, and usually, people will say, oh, but Max, this is in between kill zones, I can't execute this. That's flawed thinking, in my opinion. I'm really not a big fan of macro timings and whatnot. So again, we got a shift here, and I'm just playing swing trades, right? Scalp trades. And what you see here is a shallow close below that liquidity grab, right? And the issue is that this one doesn't really get confirmed all too nicely, something along these lines, right? Where you see, hey, there is the world's smallest imbalance here, and there is the world's smallest imbalance here on M5. You go to M15, and you'll quickly see that it looks a lot better on M15, but your shift is a lot higher. So I was okay with that, right? There's actually an imbalance here and an imbalance lower. And in conjunction with it being a shallow area, pretty much under that run on liquidity, right? There's no body close here. So we know that buyers are kicking into the market, followed with a higher time frame. So again, M15 is leading, right? If M15 shows it, you don't need to look at M5, right? You can refine on M5, but M15 already gives you the green light, right? You see how we did that, just like with the imbalances. So M15 shows the imbalance to the upside. Okay, I'm confident taking this shift, and what I'm doing here is one of two things. I'm isolating my stop loss, right? So boom, on the shift, entered again, and I'm isolating that low. Very, very aggressive. And here we go again, playing up until that open pocket, just like that. Now comes the interesting part. If you could catch this, right, you can also catch the E2. The E2 was right here. And again, competition, high risk, high stakes, high rewards. Very, very simple. Off of the proximal SL here, right? Rolling your SL to break even on the main position, so you are not increasing your exposure, you are keeping the exposure the same, and then same target. And just like that is how you get another 30% on your TradeFlow competition. Not the most difficult one to catch, a little bit more adaptive. You need to be a lot more aware of the situation, right? This is where that pocket came into clutch, right? Instead of targeting the, let's say, distal line of the H4 imbalance of this liquidity void, you can refine that for your exits, right? Be greedy with your exits, lower them, refine them to the execution time frame, but be, let's say, very aware of the higher time frame with your directional bias, right? You've got to put everything in your own favor. With your TPs, you don't want to be putting them too far away, so keep them close. Take your risk off your position as soon as possible, especially if you're playing aggressive trades like that. And then with your overall narrative, take the ones from the higher time frames. Higher time frames are always going to be leading, H4, H1. Then you need to adapt everything to the execution time frame to make your entries a lot better, and your exits in this case. If your TP on M15 suggests, hey, it could potentially be closer, that's okay. Use it on M15, because this is a prime example that M15 was leading, the pocket was there, and just like that, you can see precision in terms of the exit. Like, imagine I did the distal line, I would have not gotten TP, probably break even, and then break even with random partials here, right? Now let's talk about the other position that happened here. I didn't partake in the shorts, but the shorts were there. You can see very, very beautiful price action. So I hope that you guys understood the longs. I shot the bullet 3 times that day, which was pretty interesting. But the shorts, again, same concept. H4 array, H1 array, M15 pocket. You can see it develop really nicely. You've kind of got this buy model that happens here, and then boom, your sell model occurs. Very difficult to partake in the actual continuation lower. This is when I started looking for potential shorts, but just didn't get anything, nor on M15, neither on M5, right? The issue with, if you were to look at M15 and you were looking for continuation shorts here, you could enter, but you're already very close to your target, and your stop loss is not really predefined in that sense. Obviously, you could overlap it with the BPR, you'll still get the same entry, obviously, of this imbalance, but not so nice. Let's talk about the actual E1 entry here that you could have got short side, which would have been obviously this run on liquidity right here, tapping into a higher time frame array, this being your shift, pullback, body close above, pullback, OB, imbalance, OTE, whatever you wanted for this invalidation point above this, and just run it to the lows. That is a trade that I would have taken on, let's say, my challenges, private account, and on the fund, because this was a lot cleaner. You could even wrap the stop loss here and then run it all the way back to London lows or London lunch lows and catch a very, very clean 3R in that case. So if I just make this a little bit more visible, you can see pretty much in between what we are looking for. Order block, imbalance, OTE on that. You've got all your higher time frame arrays such as H1, H4, and you could just run that all the way lower. Simple, very good day, very active day. Had to be a little bit more adaptive with the longs, but the shorts were a lot more textbook. I got my crumbs in the morning. I didn't necessarily really participate in this, and then once it was too late, price already left without me. Going back to this low, again, you can be greedy with your TP a little bit higher and still bank a solid 3R with potential partials along these lows or along, let's say, open pockets that you see throughout that leg. So hope that makes sense. I hope you guys got a little bit of value from that, and I'll see you guys in the next one.